Hey everyone, you can almost feel the anxiety in the markets right now, can't you? It feels like the US market specifically is getting squeezed from two different directions. So today we're going to break down exactly what those two big forces are.
Yeah, it really all boils down to two huge fears hitting investors all at once. On one hand, you've got this nagging worry. Is this incredible AI boom we've all been watching actually just a giant bubble? And then, bam, you get hit with a second one. The idea that the Fed is going to swoop in and save the day with rate cuts. That hope is pretty much disappearing. So you might be asking, how nervous are we talking? I mean, is this a big deal? Well, if you peel back the layers and look past the big headlines, the data is screaming one thing right now, and that's extreme fear. I mean, just look at this. It is a sea of red. The S&P 500, the Nasdaq, the Dow, all of them are down for 3 straight days. And you know, this isn't just some little blip on the radar. This is a real sustained sell-off. It tells you the negative feeling is widespread. And if you want a perfect picture of the mood, look no further. The VIX, Wall Street's so-called fear index, it shot up over 13%. Now, when you see a jump like that, it means traders are scrambling, buying up insurance against more drops. It's a direct pipeline into market anxiety, and folks, right now, that anxiety is just off the charts. And to kind of wrap all this up, just look at the CNN Fear and Greed Index. It swung way, way over into fear territory. We're talking its lowest point since back in April. So think about that. We've gone from feeling pretty good to downright scared in a blink of an eye. So what in the world is causing all this? Okay, let's get into the first big reason for all this nervousness. And honestly, it's pretty ironic. The AI sector, the thing that's been the rocket fuel for the market all year, is now what's making everyone super nervous. People are seriously starting to ask, hey, is this whole AI thing just a massive bubble about to burst? And really, this is the multi-trillion-dollar question, isn't it? We see these huge tech companies spending, insane amounts of money on building out AI data centers and all the infrastructure. But Wall Street's finally starting to pump the brakes and ask, okay, we get it, you're spending a ton, but where's the money? When does this turn into actual, real profit? And listen, this isn't just random chatter on the internet. We're talking about the heavy hitters here, Goldman Sachs, Morgan Stanley. They're officially putting up warning signs. They're basically saying, hey, tech stocks could easily drop 10, maybe even 20%. And as soon as they said that, boom, you saw the big guys like NVIDIA, Microsoft, and Amazon all start to fall. But it's not just the big banks getting worried. There's a really famous investor, one of those people who loves to bet against everyone else, and he's decided it's time to make a big move. Yep, I'm talking about Michael Burry. The guy from The Big Short. The one who called the 2008 housing crash when nobody else saw it coming. Well, he's now aiming his sights squarely at the AI boom. And let me tell you, when Michael Burry makes a bet, Wall Street pays very close attention. And he's not just talking, he's acting. He's shorting major AI stocks, which is just a fancy way of saying he's betting their prices will go down. And who's he targeting? Number 1, NVIDIA, the king of AI chips. And number 2, Palantir. That is a huge vote of no confidence from maybe the most famous bear in the market. So, okay, you've got the AI bubble fears swirling around. As if that wasn't enough to deal with, the market just got hit with a second gut punch. Remember that cozy little dream we all had that the Fed was going to start cutting interest rates? Well, you can pretty much kiss that goodbye. Just look at how fast the thinking has changed on this. A month ago, the market was basically certain, like a 90% chance, we'd get a rate cut in December. Fast forward to today, that's crashed all the way down to 40%. That's not just a change, that's a complete collapse in expectations. So what happened? Why the huge reversal? Well, it comes down to two things. First, inflation is just being incredibly stubborn. It's stuck around 3%, and the Fed wants it at 2%. No deal. And second, and this is the weird part, the economy is just too strong. When you get good news, like a great manufacturing report, it's actually bad news for anyone hoping for a rate cut. And for anyone out there who watches the charts, this is a huge red flag. Both the S&P and the Nasdaq just broke below their 50-day moving average. That's a massive psychological line in the sand for traders. Crossing it to the downside, that's basically a signal that the bears might be in control for a little while, and it just pours more fuel on this fire. Okay, so the US market is basically drowning in here right now. But get this, Halfway across the world in Korea, it's a totally different story. It's a really interesting contrast, and it's setting up this massive tug of war in the global market. Yeah, think of it like this. On one end of the rope, you've got the US pulling down with all this AI bubble fear and its biggest tech companies stumbling. But on the other end, you've got Korea pulling up, powered by a boom in memory chips and a ton of foreign investors jumping in. So this brings us to the key question, right? Are those foreign investors going to keep buying? That's what we all need to be watching. If they keep piling into Korean chip stocks, then this rally might be the real deal. But if all the bad news from the US scares them off, then what we saw yesterday might just be a flash in the pan. And I do have to add a little note of caution here. The headlines about the Korean market looked amazing, right? But if you dig in, the rally was really just two companies, Samsung and Hynix. Almost everything else was down. When you see strength that's that concentrated, it can be a sign of fragility. It's definitely risky. Okay, so this brings us to what I think is the most important takeaway from all of this. How can the US be panicking about an AI bubble at the exact same time Korea is getting hyped for a memory supercycle? Well, it's because we're really talking about two totally different sides of the same AI coin. Think about it like this. The US focus with companies like NVIDIA is all about the brains, the software, the fancy chip designs. And that's where people are starting to get nervous about the price tags and profits. But Korea, they're focused on the muscle, the actual hardware, the memory chips from Samsung and Hynix that you absolutely need to make any of that software work in the first place. And that right there is the key. You can argue all day about whether every single AI software company is going to make money, but what's not up for debate is this. For any of this AI future to happen, the physical stuff, the data centers, the servers, has to get built. It's not optional. And guess what that infrastructure needs? A ton of high-performance memory. So while the US software story starts to look a little bit like a house of cards, the demand for the actual bricks and mortar, the hardware that Korea makes, feels like it's built on a much, much more solid foundation. So I'll leave you with this final thought. Are we watching a major shift in the market? A moment where investors are saying, you know what? I'm tired of the cool story. Show me the money. Is the market finally demanding real, tangible profits instead of just hype about the future? Because if that's what's happening, well, that could change the entire game. Thanks for tuning in.